Good afternoon and welcome to On Point, a look at some of the top business, general and sports stories from around the world here on the SABC News channel. My name is Nastassia Arendse. In the headlines this hour. Welcome to the Alternative Investor. Frantic trading and surging prices for natural resources from copper and iron ore to soybeans had markets abuzz. Grocery retailer Pick n Pay swung to a half-year loss, hit by incremental costs, and said it would not pay out a dividend. In 2019, the world financed $282 billion of renewable capacity, with onshore and offshore wind leading the way. Sean Summers, who took over earlier this month and has been charged with reviving the struggling core Pick n Pay grocery brand, joins us live for more. Sean, thank you so much for your time. From a leadership perspective, is it hard to make decisions when the commodity you produce is both contested and at the same time it's essential? This episode is coming to you from the Future Minerals Forum in Riyadh, Saudi Arabia, where global mining executives as well as government officials have descended into Riyadh to tap into the capital that Saudi Arabia is plugging into mining investment. Were you having conversations with your peers in the industry, or perhaps even with investors? What's your take on Saudi's positioning, especially in the critical minerals sector, and also in what they describe as the super region? As we start off the week, given everything that we've had to digest last week, the Fed, the Bank of England, the Bank of Japan, how are you reading global market sentiment? Let's talk Pick n Pay for a bit. I had a conversation a minute ago with the CEO, Sean Summers. The current, if you look at the share price now, it's down about 11%, but at some point in the morning, it was down 14%. Were there any bright spots in these numbers, given the fact that we knew that things were going to be bad? Momentum has released its financial market outlook for 2025, saying that the investment preference for local over global assets in the next year is premised on the combination of superior expected fundamentals, more favorable valuations, and some anticipated rent strength. So today we figured we should unpack the idea of a commodity supercycle and also see if there's any investment opportunities during a supercycle. To do that, we're joined by Peter Major from Mergence Corporate Solutions. Peter, thank you so much for your time this afternoon. Carmen, what's the conversation with you and the team when you try and define what diversification means in this environment, especially when we're kind of unclear about the current relationship we're seeing between bonds and stocks? Let's leave it there. Roy, thank you so much for your time. Until next time, goodbye.